Hey everyone, this is Rob Roy. We just finished the live U.S. market update over on the Hub Financial channel. You are watching the recording here on the EWO channel, but if you'd like to watch these live, go register at the Hub Financial channel and you'll be notified immediately when one of these live broadcasts is posted. If you're watching the recording, a reminder, we have the chapters feature. If there's a specific stock that you're interested in, you can go right to it by clicking on it in the chapters feature. Again, don't forget to go register at the Hub Financial channel to see these live. Have a great holiday weekend, everybody. Take care. Hey, everybody. Welcome to the U.S. market update. So taking a look at the market today, going in front of a holiday weekend, markets closed tomorrow for Good Friday. You can see that we did finish to the upside. That's always an important thing because traders look to square positions moving into a weekend, especially a holiday weekend. So the fact that they weren't really concerned about being long and moving to the downside to close positions out long, the fact they held them is a positive. So if we take a look at the moving averages, you can see that we are still above the 1030 and 50-day moving averages. Nice break of the 1030. That's a positive cross. A lot of floor traders look at that. So that looks pretty impressive and constructive. So here we look at this zigzag pattern. And the interesting thing is now there's two of them. So we have this pattern here. And then if we go back and look at the previous pattern, it's always good when you have multiple patterns showing you roughly the same price. So what this is showing you is the original zigzag that was showing us 100% extension around 434. We now have, we know, a complex C wave, which is giving us the extension at 61.8%. So it's right at a 44%, just past that 38.2% fib retracement level. And that's what you expect when you have a 38.2% fib retracement, a 61.8% level as far as your extension. Going back to the B wave, there you can see was 55. So when you get over 50%, you are looking for 100%. But note that when we're looking at those two levels between the two, how close they are together. So we have a lot of information that there's likely or likelihood that we will continue to the upside. So all in all, pretty constructive week. We did finish down for the week if you wanted to be technical about it, but not much. And then movement to the upside, I think, is constructive. We look at interest rates here. This is the only little concern that I have right now is the fact that we broke below that 34 level, which we know is a level I've talked about for a while. It's okay breaking below that with rates going down. I just don't want to see rates go vertically down, and they kind of are. And the reason for that is if we start to break this significantly, and we go back and look over here, from the August lows on rates, that rally was pretty significant to the upside. And then you come over here, and if there's a significant break, there's a chance that we could have a bit of a vacuum move, a pretty vertical move lower. And you might be thinking, well, isn't that good for tech stocks? It is. Isn't that good for the market in general? Maybe. And the reason that I say maybe is the fact that if we move down too fast in rates, that means a lot of money is moving into the bond market, prices and yields moving in inverse directions. And so if yields are moving down significantly, that means prices are moving up. And that's more than just, okay, the Federal Reserve is maybe done raising rates and the fact that rates are dropping along those lines. It could mean that, hey, people are really worried about the second quarter, a significant recession, et cetera, and money is pouring into the bond market. If money pours into the bond market, then it's probably coming from the equities market to get there, and that's not a positive. Looking at the dollar, this is super constructive in my opinion. This is what you want to see the bonds do. I'd love to see bonds just kind of trickle down like this, like the dollar's doing. And we still have that wave 5 down around 97. I've been on the record numerous times in these recordings talking about as long as the dollar stays above 96, I think that's very constructive. So this, I think, is a great chart as far as the dollar moving down. I just would like to see interest rates follow along that level. We take a look at the VIX before we look at the other markets. Another area of potential concern here is we are down at the bottom here, or at least where the bottom has been recently. Can the VIX go below 18? Yeah, I mean, it's been down to 15, it's been down to 12. We even broke 10 at one time, but we've been pretty volatile lately. So the fact that we're coming down to an area that's been support recently, that just gives enough caution to stay, you know, just be cautious and be constructive. Don't get greedy. It's not an all-in signal. This isn't load the boat, as we used to say, as far as to the long side. I think cautiously optimistic would be the term that I would utilize along those lines. So taking a look at the other big indices, the DIA as a representation of the Dow, as you can see here, no 5-wave pattern, nice movement to the upside here, little bit of a consolidation there. This is one of my favorite patterns for a breakout, when you have this vertical move here and then you have a little symmetrical triangle, and that is the operative word here, little. It's a small triangle, but Elliott himself always said, don't discount the small triangles, they work as well. So we're likely going to have some sort of a small breakout here on the Dow. No way to know which direction it will be, but likely some little move one way or the other here. But when you have this vertical move with a symmetrical triangle, it high probability that we're going to have a little bit of a move. So perhaps it's just enough to bring us up here to the resistance area at 340, or it could also be just enough to break us down and we come right back down to 330. So that's about all there is there. So I don't think there's anything too exciting on the horizon for the Dow. A small bit of a breakout one way or the other, but not a major move above resistance or below support. Taking a look at the Qs, this is where you would think, okay, the fact that rates are moving lower, the dollar's moving lower, this has to be bullish for those. And I think it has been. We look at the moving averages. We touched the 10-day moving average on the low yesterday, closed above it today, traded a little below it for a short period of time, but we're in the process of moving up to this tap box, time and price projection, with the software, the best Elliott Wave software that I know to exist. Profit source, find out more about it at hubb.com. I've tried all the Elliott Wave softwares that I know exist. I don't like to say I've tried them all, because perhaps there's some out there that I'm not aware of, but of all the ones that I am aware of, this is by far the best. And I also like the fact that it's programmed directly from the algorithm that Ralph Nelson Elliott wrote. There's a lot of software programs regarding Elliott Wave that are personal adaptations of the algorithm. And if you don't know what their adaptations are, then you may have some trouble reading it. But looking at the Qs here, back to the Qs, getting above this area here at 310 is key. Look at where the lows were the past 2 days, right where the top of that wave 3 was. So I think that's constructive, and being above the 10-day moving average. So I think that all looks good. If we want to find some sort of okay, this is not all in, as I talked about on the long side, this is where we look at the small caps, the IWM, and we have this support area right here at 170, and we're hovering above it. That's a good thing, but you can see the IWM is not really participating much to the upside here. Our resistance area is way up at 190. So the fact that, you know, we're having some upward movements in spots, bit of a stock pickers market, I think, right now. But the fact that the small caps aren't participating means that the general view is not, hey, it's risk on, let's go. There's still some concern out there, and that's evident, I think, by the IWM. If we can see that turn, look like perhaps we were breaking out and heading back up to 190, and all we did was turn and come back down. So again, positive is we're above 170. The negative is it really isn't moving to the upside. So caution, stock pickers market, but cautiously optimistic, I think, is the theme of the week.
But back in January, you did a video on the EWO channel suggesting that the bottom was in place for the S&P. Now, this is more of a two-part question for you from me. How do you think these job numbers impacted the market? And do you think that they have changed the Fed's way of thinking going ahead?
That's a great question, Dutch. And yeah, the jobs information that came out, we had the JOLTS report, which is job openings. And it's the first time it's dropped below 10 million in 2 years, which sounds like a lot of openings, right? 10 million job openings, but it's the first time it's been below 10 million in 2 years. So That's a number that you would say, okay, is that showing that the jobs market is cooling off? And then we also had today the jobless claims number that came out. So JOLTS was yesterday, jobless claims was today, and the jobless claims number was higher than expected. So when you put those two things together, your question is a good one. Does that mean that the Federal Reserve is starting to win this mandate that they have, where they've been very adamant on they want to cool the jobs market off? They're like, we want to do that. And so based on this, it would seem like they're winning there. So the question that comes from that, in my opinion, is, all right, does that mean they're going to raise one more time? Are they not going to raise? Australia made news this week on the fact that they're going to pause. Canada had already said they're going to pause. So those two central banks have said, we're going to not raise rates anymore. We still have 25 basis points priced into our Fed fund futures that the Fed may go one more time. But what does this? How does this affect it? And the comment that you made, yeah, I think it was back on January 13th, I believe, we posted a video on the EWO channel saying, is the bottom in? And suggesting that the bottom was in based on what's known as the small business optimism chart. And it was at a low that, at least historically, every time the optimism, so this is a contrarian thing, every time the optimism had reached such a low level, the market rallied following that. So we showed that back in January, and since then it seems like that's been pretty good. Here's the chart of the S&P, and you go back and say, okay, we looked at this in January, and we've got these higher lows. We're up testing this area around 410. So again, that's a contrarian indicator. And the small business optimism, saying the pessimism is high, is what it amounts to. So, I think that with that, with the jobs data, et cetera, there is enough negativity out there. It's likely that we're going to show some sort of a recession once the Q2 GDP numbers come in, but how significant is it going to be? That'll tell us a lot. But, the market climbs a wall of worry. And even though there's positives here and there that we've been highlighting, Dux, I still think there's enough of a wall of worry that perhaps we can move higher from here.
Let's move on to those stocks of interest. And Rob, I was watching TradeFinder on Tuesday night, like everyone should be, and you mentioned Google. How did that play out over the last couple of days?
Wow, I'm glad you were watching it, and that actually worked out extremely well, and you're correct. Google was the case study consideration that we do, and we do that every Tuesday night at TradeFinder. We talk about the markets, we look for case study considerations, and we do a live Q&A at the end, and Google was our case study consideration, as you mentioned, and you can see what happened with Google today. We did actually send that out as an alert to our alert subscribers at ewotrader.com. With TradeFinder, we look for case study considerations, and then you're kind of on your own. What do you want to go from there? At ewotrader.com, our alert service is we send out alerts on entries, any adjustments and exits. So we kind of take you by the hand and lead you from beginning to end on the trade. But as far as this one, regardless, if you follow this one yesterday, you had a really good day today, and we actually took that trade back off today for a 35 to 40% gain, depending on where you were when you got the exit. It was 35% was our fill, but it kept running after that. So by the time the subscribers got around to getting it filled, they probably did better than we did. But there you can see the big move to the upside there today on Google. So that was a great one for TradeFinder, and our record is pretty good on case study considerations that we find on TradeFinder. So every Tuesday night, 9 p.m. Eastern time, it's free to register. And look at the link here in the video, or go to our website, ewotrader.com, and register. Love to have you. It's a lot of fun. I'm glad to hear that you were watching, Dux.
This one's moved around a lot this week, AI.
Yeah, and that ties into really what the news was on Google. If you're wondering, well, why did Google jump up so much? Well, they came out and they were talking about their AI and their investment in it, and it's going well. And we know that there was some news that came out with the new AI stuff within Google before, but there was more news today. And so that was part of what created this big move to the upside, likely what created the interest on Twitter with the symbol AI, and you can see it's C3 AI. And people ask about this because look how volatile this is, Dux. The thing moves like crazy, up and down, up and down. And you've heard me say this numerous times. Anybody that's viewed us before knows that I always get concerned when we have these vertical moves. What goes vertically up often comes vertically back down. I mean, look at this stock as a perfect example. Vertical move up, right back down. Vertical move up, right back down. And then we had it again, vertical move up with a doji, came right back down, but a nice bounce back today. And I think that's kind of why there was so much interest in this stock on Twitter. They're wondering, is there going to be another one of these big runs back to the upside? Well, we had a nice bounce today. The key here, and these kind of stocks are so wild. They're not kind of my cup of tea with the this kind of volatility movement. If you get it right, obviously it's great. But if you get it wrong, you know, if you're on the wrong side of this, it's not too much fun. But as far as analyzing the stock chart, there's tremendous support here at 20. It held, it bounced to the upside here. So I think if you're looking for something and you have a high risk tolerance and you're looking for something from a bit of a speculative standpoint, you could take a shot and say, hey, maybe we run back up to 30 or plus again on this. You know, the stop is easy. You can see where 20 was the support level. If it breaks below 20, you get out. But the bounce back today got it above the 50-day moving average. So I can see why people were talking about it on Twitter. So this is one, be careful and make sure that if you're going to play in this area, it's your high risk money is the way I would view this. But interesting that I think the movement today piggybacked off of what was going on with Google's AI chatter that they had today. Yeah, everybody was talking about Apple today. I'm not really sure why. There wasn't anything too significant, but it was right up on the list of the stocks people are looking at. And of course, stocks, we know that everybody always is interested in Apple. So maybe that's all it was just the norm, but sometimes it's on that list, sometimes it's not. We have a nice zigzag pattern here within the 5-wave impulse pattern. Again, when you see multiple Elliott wave patterns, it's something to pay attention to. Now, note that the wave 4 at 30, right at 40%, excuse me, is right at the 38.2% fib level, and that leads you to a 61.8% extension, which is exactly where we are. And we've had a little bit of sideways move here. That's constructive. And then the question becomes, from here, what is the likelihood that we move from here and go up to an extended C wave up at the 100% level? I like to look at one of our favorite confirming indicators, which is the DMI, to see what's the likelihood that you move from where the C wave was supposed to go. So let's be clear, it's done what it was supposed to do. Now we want to know, will it be an extended C wave? Because the 61.8% was the target, and the DMI still looks pretty strong. You don't want to see that positive directional indicator move below the ADX. There's still some separation here, so perhaps it was a little bit of caution into the weekend. But the fact that we finished to the upside today on Apple, but the positive directional indicator went lower, I think you want to be a little cautious there. But you know, the chart in general looks pretty decent, and you know, once again, the support area is pretty easy to see right in here in this 160 area. So I think as long as Apple stays above 160, you can take a long position here and see if we do get that 100% extension. Yeah, you're spot on there, Dux, and that's exactly what the creation of this value has been, is the fact that they are going to split into multiple companies, and then that leads us to, there was so much chatter, right, on the world in China. Does that mean that the Chinese government is finally going to back off because they've been creating so much regulation for their big companies, their top companies, and it was hard to understand why would they do that? So perhaps the fact that Alibaba feels comfortable enough to split and move into different companies means that they feel that perhaps there's going to be less regulation moving forward. The key here, there was that big move that occurred on the commentary that you were talking about, Dux, here, where we had this big break to the upside here on the news. And the key to me is that we've held above 100. So we got above 100. It's come back, tested it numerous times. We're still above the 10-day moving average. I like this one. You just always have to throw that little caveat, keep that in the back of your mind of at any time, you know, the Chinese government could come out and say something more from a regulatory standpoint. But if they will back off and leave things alone, I think you could get a nice bounce and run out of Alibaba. I can understand why there's interest in this, especially with the news that came out. So, I mean, look at this potential move. That's a pretty big move forecast there from 100 to 140. And if the government in China stays off, I think this has a high likelihood of occurring. And then you have the fundamentals of the fact that China is coming out of their lockdown, and you know, their economy is likely going to reaccelerate, et cetera. I think this one looks good. Your stop is 100, though. Once again, as long as it stays above 100, you can be long. If it breaks back below 100, I think you close the position out and wait and see. It's always in the Twitterverse of the most talked about stocks. And if we don't cover it, people ask about it anyway. So we might as well just put it in there because it was in that list. So I stay with where I've been over the past couple of weeks here on Tesla. And the fact that it's holding this 180 level with the news coming up this week that you referenced, Dux, I think is a positive. But my view on Tesla remains the same. If it breaks below 180, I think it's a short. And I think we're probably going to come down and test these lows down here from early January down around 110. But it has to break 180 with follow through. If it doesn't do that, then we have the chance of it bouncing up to 220. And could this news perhaps be viewed as a positive enough to break the stock above 220? Because I think if it breaks above 220, it's a long. So right now for me with Tesla, and I know nobody wants to hear this because everybody wants to know where's Tesla going. But if I'm being as honest as I can be, which I always try to be, I think it's the trading range here between 180 and 220 is a no-go zone. You watch and see. So just to summarize again, a break below 180 with follow through, I think we're probably shorting back down to 110 or so. But if we can break above 220 with follow through, then geez, we could run back up and try those highs again at 310. I just think you have to wait right now. And I know patience regarding Tesla is not what people want to hear. Unfortunately, though, that's how I view it. Good old Mr. Softy. Yeah, you're right. It was actually on our list of case study considerations that we took a look at. You were watching. You're not kidding. So yeah, looking here, we had a nice move today to the upside on Microsoft. Hit the 10-day moving average on the low, and you can see what a nice rally that was. And the key here, Dux, on Microsoft is now we're right at this level. And we broke above it today, just barely, but right above that area from the August highs. And is that going to act as resistance? Now, the fact that we hit the 10-day moving average on the low means we're not really that overbought. I don't like it when stocks break resistance levels, major moving averages, break out of a triangle, et cetera, when you're already overbought or oversold if it's the other direction, because those moves tend not to hold. But we're not. And we tested the 10-day moving average yesterday. Tested it again today, and it looks like perhaps we can move to the upside here. Now with the wave 4 at the 61.8% level, the wave 5 is at 100%. That's your first level. So as we were talking about with the zigzag, you want to see what does your confirming indicators tell you about the potential for an extension. In other words, can the wave 5 extend past the 100% level, which is the target it's supposed to go to. So we're at the wave 5 target. We're kind of breaking above those recent highs, and you look at the DMI, and that's about as supportive as it gets. You can see here's what you want, that positive directional indicator moving up on an up day, the negative moving down, buyers firmly in control here. The ADX is showing you that's a strong move. For those that aren't familiar with the DMI, when the ADX is moving up, that doesn't tell you the stock's moving up. The ADX gives you the strength of the move. So the fact that it's an upward move and the ADX is moving up is telling you, yeah, there's strength behind that. So it looks like Microsoft wants to go higher, Dux. The question that comes up so often is, does Elliott Wave work with Bitcoin? And the chart here, we've talked about this the last couple of weeks as well, Dux, but you know, it's just been so spot on. 61.8% wave forward correction, 100% extension. It doesn't get any more classic Elliott Wave Fibonacci than that. I mean, that is exactly what's supposed to happen. And the concern that I've had is the vertical nature of this wave 5 move. I would have much preferred a more 45-degree angle move to the vertical move. But since then, we've gone dead sideways and consolidated. And if you're looking for the best way to consolidate a vertical move, that's it. So dead sideways here, right, bouncing back and forth in this tap box. I mean, man, the software nailed this one so well. So, you know, you have the range here is what the tap box means, time and price projection. And since Bitcoin made that strong move, it's been staying there. Pretty impressive. And we have that halving, you know, people make fun of me on YouTube all the time for not pronouncing that right, but Bitcoin is going to go through that process first quarter of next year. And historically, moving into that, about 9 months to a year before that is when Bitcoin has taken off in the past, and this worked every time. So is that the beginning of this move? I think you just want to be tiny bit cautious because it's still a vertical move. But if you want to know the best way to consolidate a vertical move, that's what it is, what Bitcoin's doing right now. So you got to like that price history over the past couple of weeks there on Bitcoin. I know it hasn't accelerated, but the fact that it hasn't given back some of that big move from March, I think is pretty impressive.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.